Hello folks, and welcome to Pro Trader Strategies Market Commentary for Wednesday, January the 13th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that all comes in to impact the markets with some of my market analysis. And I'm going to do the same thing for you folks out there, but I go a little bit further, and I'm talking about these option strategies that I'm trading and implementing into my portfolio on any given daily basis. For you all out there, also, you can check out my guidelines to implementing option strategies. We don't just pick option strategies out of the hat here. What we do is we look at these underlyings and have a finite guideline for you to follow to find the optimal option strategy for any given assumption. So please check those out at protraderstrategies.com. Also, one other thing I forgot to mention yesterday is doing a little bit of fun this week. Well, why? Because I'm wearing all kinds of crazy golf shirts, if you will. Actually, this is a rugby jersey for many of you that are out there that don't realize that I used to play rugby for probably, it was close to 12 years there. So anyway, golf shirt, whatever, rugby shirt, whatever you want to call it, polo. My wife took all of my shirts to the dry cleaner, so basically I am left with what we used to do on the floor, and that was wear like a polo shirt underneath our jackets, you know, and then a tie around it, obviously. But anymore, those shirts are just sitting in my closet. But we used to wear some crazy ones like this here, or what I wore yesterday, and I meant to kick off this week with the crazy golf shirt, is my Alice Cooper shirt from a golf outing. Yeah, that's the one I wore yesterday. Meant to show you guys all. But anyway, without further ado, let's get on with the economic data. Across the pond, not really a whole lot to see there other than Lagarde was speaking. They also had European industrial production numbers coming in lower than expected at 1.4% expected, or a negative 1.4%, expected to be a negative 0.4%. That was, Italian industrial production. European industrial production actually ramped up a little bit to 2.5%, expected to be 0.2%. So good to see there. Here in the United States, we got consumer price index coming in line with expectations at 0.4%. That was what the economists predicted, which is actually even slightly higher than what was released last month at 0.2%. No revision there. Core consumer price index, which is going to strip out food and energy, coming in at 0.1%. That was in line with analysts' expectations of 0.1%, but it is coming off from last month's reading of 0.2%. Finally, we got crude oil inventories, a drawdown of 3.2 million barrels, exactly in line with what was expected of a drawdown of 3.2 million barrels. Should that be giving lift to crude oil? Well, we've talked about this. I cannot see a situation where the demand is starting to increase in crude oil and make enough of a prediction to get this market to move higher. I just don't see that. What we're seeing here with this drawdown of 3.2 million barrels, let's take that into account. That is a pullback from inventory. Something to note though, production of gasoline distillates was unchanged. So they continued to operate at that near capacity, which I think is right around 80%, slightly below that. Anyway, what we're seeing is the buckets of the distilled products, being gasoline, distillates, Cushing's a different story, but gasoline and distillates building quite dramatically. We saw gasoline build by almost 3.5 million barrels, and we saw the distillates increase by very close to 4 million barrels. That means what we're doing is we're seeing the production continue. We're seeing the supply come in. That supply in the system is going down because they are converting it to those byproducts, being gasoline and distillates. So we're not seeing the demand for these products. We're just seeing the conversion happen, all right? So that is something that's very important. Now, we had a bit of a move to the upside in crude oil. We're seeing the weakness off of this data point. I would venture to say that we're going to see crude oil start to roll over here because there is not really the demand. Yes, we can cut back on supply, which we're starting to see out of OPEC plus, but the fact of the matter is there's still this inventory coming into the system. Yes, we're producing byproducts, but they're just going into buckets that people don't often see. So note the shell game here, okay? But crude oil off slightly, but pretty much unchanged on the day. Gold starting to make a move back. Now, I talked about this in length yesterday at this bottoming for the past couple of days. Now, yesterday when we were talking, it did not look like it was going to get confirmed, but you can see the move to the upside did confirm this gold as a bit of a bottom here. So how far do we retrace to the upside? I'm expecting us to go back to this point of control, or at least test the 1900 handle in this trade. So I'm still in gold. I am long calls in here, and both in my trading account and in my IRA. I'm long the March 175 calls in there, all right? So wanting to make that move back at least to 1900 in gold. When I'm saying that, I'm in the ETF GLD, okay? And then let's move on to the bonds. They're making a bit of a move to the upside here today. I might have missed this move. I wanted to wait for this one to get confirmed, because even when we were talking yesterday, this setup was very similar in nature, where I really couldn't read the tea leaves very well and didn't want to step out because we had counter-opposing dojis here. And as we can see right down here at the bottom, we've got two counter-opposing dojis, so I'll just show this one up. So basically, we've got moves to the downside, right? Moves to the downside, and then we've got a doji that basically look like this at the bottom of a move. Now, that can signal a bottom as well, that kind of a hammer bottom there. And then the next day, which was yesterday, we got this doji. Now, that to me says one of two things. We're either going to continue to the downside or we found a bottom. Those are one of those setups where you get these two separate dojis counter opposing each other, and you have to kind of wait and see. Well, today we've gotten a move to the upside. So to me, it looks like bonds are looking to move back to the upside. Now, we went down there and tested that 167 area. That's where I was talking about we should find a lot of support there. We've got two Fibonacci's lined up right side by side to one another. That was going to be a big support resistance area, a support on the way down, resistance if we had broken through that. Now, it looks like we have created that move and started bending to the upside. So I'm trying to get in on a TLT trade that I might have missed, because this market has continued to move to the upside already today. VIX is coming off again today, but we've got a bit of a mixed bag here in the equities. You can see the Dow Jones Industrial Average in negative territory, but albeit only slightly. 16 points, 20 points, that can be made up in a matter of seconds, but we're having a very inside day. Everybody kind of waiting to see what happens with the impeachment process of Trump and a lot of other levers and pulleys going on. So I think that the market is kind of taking a pause here and waiting to digest more information coming forth. All right, NASDAQ moving higher by 82, almost 83 points, and the E-mini S&Ps, in positive territory, but again, could be considered slightly unchanged at this point in time. It's kind of like that wiggle room between in the monies and at the monies. The in the monies can sometimes be at the monies, and the out of the monies can sometimes be at the monies, right? So that's kind of what we're talking about here. It is pretty much unchanged, and we can see that really show up here with this chart breakdown of the daily 30-minute candles. The gray area is overnight. Blackened section is the day session. So basically, that would be one full day session. A lot of millennials are starting to come in really early and trading before the market opens, the theory being that they feel like the early bird gets the worm here. So a lot of pre-market activity starting to happen in equities, whether it's the futures and or even the stocks in after hours trading. So, these overnight highs and things that I've been talking about might start losing or start gaining a little bit, I should say, more trust in those numbers as we move on and become more of a digital trading almost 24 hours now. All right, so let's talk about a couple of things that I've done. Home Depot. Now, yesterday with Home Depot, I decided to roll over my short calls. Now, if you guys remember, I have on the poor man's covered call in this trade. Decided to go in there, bought some, further duration in the money calls, and then financed some of that by selling some covered calls. So originally, back on December 10th here, where's December 10th? Right here, I ended up getting involved in Home Depot for the poor man's covered call. And I did this after the webinar. So taught all of the rules involved and why I was picking this strategy and for those reasons. So please check that out. I go into much more detail than I'll be able to give justice here in this market commentary. But I had gone into the March and bought the 210 calls in there and then sold the January 285 calls. All right, so that covered call part, the short 285 calls in there, financed my in the money calls. All right, which basically I got rid of all of the extrinsic value. So I own the 210 calls for what they are really worth. All right, the intrinsic value. Now what I've done is yesterday I rolled out my January 285 calls in there to the February 295 calls. So I rolled those out and up in time and collected a little bit more credit. So I'm lowering my overall cost basis on the long calls I own, those long 210 calls in the March. I've lowered the overall cost basis on what I own those for. So, lowering my overall break even by rolling these calls out in time, collecting another credit. But I also increased the spread width on this trade by $10, right? Because I had rolled the 285 calls out in time and higher to the 295 calls, all right? So I've increased my width there. Now my short 295 calls I think is great strike location, especially headed into an earnings where I own my long call. So I expect that long call to expand in volatility, increase in value, and obviously still get the directional move in my favor. But lowering the overall cost basis on this trade by selling those and rolling it out in time, just like we talk about, staying mechanical with these trades and continuing to try to lower our overall cost basis. That is the best way to increase the yield in your portfolio. All right, folks. So that one taken care of. PENN, when we were up at the highs of this morning, I tried to do some more covered calls on this in the January. So they only expire in a couple of days. So I was looking at getting above and selling the 115 calls in there for 55 cents. Now I chased this all the way down. It I think opened up at around 89. Was the last trade I saw. I was trying to get $1 for it, thinking we might get a move up and test that Fibonacci or that 109 handle. Came shy of that by a couple of dollars, but I thought with the types of moves we've been having, we might be able to go up there and test that. Now, this chart setup right here is looking like we have a bit of a pause. That is kind of if we were to finish right here, that is just a pause, a rest. That is not signaling a top. That is not signaling that the market is going to continue to the upside either. But it really signals a pause where the market wants to take a breather here in PENN and reevaluate in a sense. That's why I really wanted to get into this covered call strategy, especially this morning. It was kind of looking a little bit toppy with that chart setup. So tried to get in there with those covered calls at the 215 handle. The market's just gotten away from me, so I'm not chasing it anymore. I want to at least collect 50 cents for this covered call and get a strike location where I am well above this Fibonacci and would get up here into the 115s. That's a long way to go as far as I'm concerned in 4 days, but especially after the moves we've been having. So I'm not going to chase it, but just keeping you guys informed as to what I'm trying to do here in my portfolio. I'm looking to sell some more covered calls at 115 in the January. So I have all theta decay just ripping out of that at any given time. So TLT, we saw that in the bonds, making that bit of a bottom there, that bottoming pattern with the candlestick set up. Well, we have a similar pattern here in the TLT, and I'm playing this to the upside. Well, trying to play this to the upside. I haven't been filled on it. I'm about 10 cents away. But we have really low implied volatility, as you can see down here. Low implied volatility. That leads us to thinking, all right, if we have low implied volatility, we have cheap premiums. I have a bullish assumption. Now I'm leaning towards buying calls or a call spread. In this case, I just went for the calls. I'm trying to buy these in my IRA and in my trading account. So want to add, long deltas in TLT in both. Also, that would protect me a little bit from the downside in equities. That would give us a boost in TLT. So all of these things trying to, neutralize my deltas a little bit in my portfolio. I am overall delta long in this portfolio, but I do feel like I need to stay mechanical, add short deltas. You guys remember I was looking at SPY puts and stuff like that as well. So trying to, protect my portfolio, add some insurance, if you will. So with this, I'm trying to get into the April, get long duration, limit theta decay, and buy the 155 calls in there for $3.20. It's trading about a dime away at this point in time. So haven't gotten filled in either one of those. Was hoping I might be able to get those by this end of this video, but those are a couple of working orders. The covered calls in PENN, the TLT trade, and I've rolled my Home Depot out and up on the short or the covered call part of that strategy. Okay, so that's all I've got for you guys. One last thing is we need to make sure we know our risks when we're trading options. So please take a moment to go over this disclaimer. We are an educational company. I'm just trying to teach you guys mechanically how to trade options. I'm not trying to suggest you guys do the same trades that I'm doing. Follow your own directional assumptions, but follow my guidelines to implementing options around your given assumption. All right, that's all I got for you guys. Other than if you can't take that, take it easy.